Hi, my name's Wes Sobana, and today we're just going to talk about the differences in an IRA and a 403b, traditional and Roth. Um, for all practical purposes, they're similar in that they're both retirement plans under the IRS code. Now, both have the same rules as to when you take normal distributions, meaning income. You can take it as early as 59 and a half in traditional plans, and required minimum distributions are required at age 72. What required minimum distributions are is it's the IRS's way of collecting tax on money that you tax deferred. So when it was contributed in the year it was contributed, you didn't pay tax on that money. And while it's in this plan, it has you haven't paid tax as well. So it's grown tax deferred. So now at age 72, the IRS basically makes you take money out of the plan. So they get their tax money in a sense. Um, if you don't take the required minimum distributions at age 72, there is a 50% penalty for every dollar you don't take out when you were supposed to. So, needless to say, take the income even if you don't need it. Um, the other thing is, for most people, that's fine. They need the money to support their retirement. However, if you're one of the lucky ones that don't need the money out of, your traditional, whether it be IRA or 403b, they make you take it, um, or you pay that penalty. Obviously, we want people to avoid any types of penalty. Now, the biggest difference in an IRA and a 403b is the amount you could contribute to it. And let me go ahead and share my screen with you, and we'll show you the difference directly from the IRS website. So here is the difference. In a IRA plan, the most you could put in is $6,000 if you're below age 50. But if you're above age 50, you could put an additional $1,000 in. So catch up contribution of $1,000. So the most you could put in is $7,000 per year. Um, Now, in a 403b, it's a big contribution difference. The difference here is in a 403b, you could put in up to 19,500 in the year 2021. So 6,000 as opposed to 19,500. Catch-up contribution in the IRA is $1,000. Catch-up contribution above age 50 in a Roth or in a 403b is 6,500. So a total of $26,000 can go into a 403b if you're age 50 or above. In an IRA, the total at age 50 and above is 7,000. So $19,000 difference. So a huge difference in as far as how much you can contribute. So that's the limits of each plan. So obviously a big advantage to the 403b. Um, Now, as far as investment options go, an IRA, there's literally almost limitless amounts of investment providers available. You can put it into stocks, you can put it into mutual funds, annuities, bank accounts, real estate, precious metals. There's literally limitless amounts of investment choices. In a 403b, though, however, it's very much different because your employer will have an approved vendor list that the investment must be selected for. Honestly, it shouldn't be a deterrent to a 403b. Typically, we'll see 20 to 30 investment providers on your employer's approved list. Now, a 403b, lots you don't hear about 403bs as much as we hear about, say, 401ks. The 403b for the nonprofit world is basically the same as as a 401k to the corporate world in a sense. Um, Again, we kind of talked briefly about the biggest difference in a 403b and an IRA is the contribution limits. Again, the 403b, you put way more money into it. Now, the other big advantage to a 403b is the fact that all of the money that goes into it comes directly from your payroll. So you never see that money in your take home pay or in your bank account. So, for a lot of people, that just makes it investing a lot easier because they never see the money. And to be perfectly honest, maybe it's a self control issue or whatever. If you never see the money and it gets invested, it just it's a cleaner transaction. Um, and that way we know it gets invested every month because sometimes, people run short on funds. Well, they run short on funds in their bank account, it drafts, there's not enough funds there. It really hurts your retirement in a sense. So that's a big advantage of the 403b is it's going to be deducted directly from your payroll. The other advantage to the 403b is if your um, employer allows, there is a loan provision. Now, what that loan provision allows you to do is to take money out of it if, God forbid, there's an emergency. um, Maybe there's an illness, you can get money from your 403b without paying a penalty. Yes, you have to pay it back. It is a loan. But, in a Roth, in a IRA, there is no loan provision. The only way you can get money out of an IRA and actually even a 403b, if you don't have a loan provision on your plan, is by withdrawing it. And if you withdraw it, the IRS imposes a 10% penalty, plus you'll pay the tax in the year that it was distributed. So big advantage there is, two big advantages to the 403b. Automatically invested from your paycheck. And second is there is a loan provision, God forbid you need to get some money. Now, as far as Roths go, what a Roth contribution is it's post-tax money, meaning it's money you've already paid taxes on. Still comes out of your payroll, but if your view in retirement is that taxes may go up, the Roth option, because you've already paid taxes on it, you won't be paying taxes when you withdraw. And I'll just use an example. Let's say you were pulling out, just for easy numbers, $10,000 a year, comparing a traditional as opposed to a Roth. And let's say taxes went up by 50%, just for an easy number. So in the traditional plan, you're pulling out 10,000, you're literally only going to take home 5,000. In the Roth, you're pulling out 10,000, you take home 10,000. So if you think taxes may go up in the future, a Roth may be a great option. The other alternative is if in the Roth, if you're doing a Roth contribution, if you don't need the money in retirement, you don't have required minimum distributions. So you can allow that account to grow and you pass on more to your beneficiaries. It really depends, whether you do a traditional or a Roth on what your view of taxes are, not only now, but in retirement. Um, it, Again, it really does depend on, what your view on taxes are. If you would like to get further information, you could email us or call us, and we'll also have a scheduling if you'd like to, talk to us about your options. You could schedule directly from this video as well. All right, there's a link below. We hope to speak to you soon, and we're hoping you're having a great day.